Gold just hit record highs. Again. And no, this isn't about jewelry, weddings, or fashion. This is about fear, power, and a global system under pressure. To understand why gold is worth so much right now, you need to understand one rule that has never changed. Gold rises when trust falls. Let's break it down. For most of modern history, money was backed by gold. Then governments decided they wanted more flexibility, so they printed money. A lot of it. In the last few years alone, trillions of dollars were created out of thin air. And when you create more money without creating more value, each dollar quietly loses power. That's inflation. Gold doesn't get printed. It doesn't multiply. It doesn't obey politicians. So when money weakens, gold doesn't rise. Money falls around it. Now add uncertainty, wars, geopolitical tension, trade conflicts, supply chain shocks. When the world feels unstable, investors don't chase growth. They chase survival. Stocks are promises. Bonds are trust. Gold is final. No counterparty risk. No earnings call. No CEO. Just value. Recognized everywhere on Earth. But here's where this cycle gets different. This time, it's not just investors buying gold. It's central banks. Countries like China, Russia, and others are aggressively buying gold. Not quietly, not slowly. Why? Because gold is neutral. It doesn't belong to another country. It can't be sanctioned. It can't be frozen with a keystroke. In a world where financial systems are being weaponized, gold becomes a form of sovereignty. And when central banks buy gold, they don't flip it next quarter. They lock it away. That removes supply from the market and pushes prices higher. Then there's debt. Global debt is at historic levels. Governments owe more than they can realistically repay. And when debt gets too big, there are only three ways out: raise taxes, default, or inflate it away. History shows which option gets chosen. Inflation silently reduces debt, but it also destroys purchasing power. Gold has survived every debt cycle in history. Empires collapsed, currencies vanished. Gold stayed. Now let's talk about psychology. Gold isn't just a metal, it's a signal. When gold is calm, confidence is high. When gold spikes, something is wrong beneath the surface. Think of gold like a smoke alarm for the global economy. It doesn't cause the fire. It tells you one already started. And right now, that alarm is loud. There's one more factor most people miss: interest rates. When rates were near zero, gold struggled, because money had nowhere else to go. Now rates are high, but inflation is still sticky. That creates a dangerous gap. Real returns are weak. Cash loses value. Risk assets wobble. Gold thrives in that gap. It doesn't need growth. It needs uncertainty. So why is gold worth so much now? Because money is being diluted. Trust in institutions is fragile. Central banks are hoarding safety. Debt is suffocating economies. And uncertainty is no longer temporary. It's structural. This isn't a gold spike. This is a repricing of risk. Gold doesn't mean the world is ending. It means the world is hedging. And when fear becomes rational, gold becomes essential. That's why gold is soaring. Not because it changed, but because everything else did.